roles and auxiliaries. And sometimes when you're just getting started, you're a beginner at this, then all of them can sound like the same thing. And I just want to break down two terms and two different people that are in the stock market. The first term are investors. Investors are the people that actually take stake or take ownership into a company. You know, they believe what the company is doing. They really like the company. They believe in their principles. They believe in, you know, their research, their development. They understand how they make money, and they see it being a profitable company, and ultimately they want to be a part of the company. So you invest in the company. You delve or give your resources to that company so you become part owner of that company because you want to grow with the company growing over time. So that's the first term. It's an investor. The next term is a trader. You hear day trading, swing trading. No matter what, you know, terminology you use, it all kind of reverts back to trading, being a trader. What a trader does is essentially they make rapid movements throughout the day. When you see those movies and those commercials of the stock market guy, he's got the ticker, he's buy, sell, buy, sell, buy, sell, 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 buy, you know, and they're getting highs and getting lows. That's what trading is. Basically what they're doing is taking their money, buying a commodity, and waiting for it to jump just enough to where they can move it and sell it and get a profit for it. There's a distinct difference between the investing and the trading. The trading is, I'm just moving around products in order to get a profit from it. Let's say I was trading Uber. I was trading Uber today, and I bought a certain amount of shares and it went up $2 that day. Let's say I bought 100 shares and it went up $2 that day. So based on the amount of shares that I had times the $2 profit, I'm up. So I need to get rid of those shares right now so I can get some money. Basically, you know, this would be when people compare the stock market to gambling. This would be the slot machine. This would be when you get some money and you try to cash out real quick so you don't give it back to the machine. That's essentially what trading is. It's a little bit more sophisticated than that, but that is the gist of what trading is. So, you know, the Ubers went up. It went up, I'm up. I need to go ahead and sell it so I can get my money. And at the end of the day now, I've made $200. And I keep doing this with different shares. I do this I buy some Google, try to sell some Google, but the name of the game is, it's like a liquidation sale. That's exactly what it is. Everything must go. So all the stock that I own that day, I have to get rid of it at a profit. And if I do that, then I have successfully traded. If not, then I'm stuck with a stock that I really didn't want. I wanted my money for that day. Now I have to wait for another day to see, you know, if this will go up so I can get rid of it. Now, the two are related in this way. A lot of times, investors, you know, most of the time they're in it for the long haul, 2 to 5 years, and that's what I mean by long haul. So their money is there. Well, traders, I just told you, usually they're in a daily or a weekly basis of trying to move these shares in and out. Well, what that does is, if a lot of people are selling one share, one sort of commodity or type of shares, and I have stock that I'm invested in it, well, these traders are affecting daily, you know, my money. They're affecting my bottom line, my revenue, my shares. Because if I own 1,000 shares of something and it's, you know, everybody's buying, that means that the price of it is going up. But if most of these people are traders that are selling it, then they're gonna move those shares, and the demand for the stock that I have now falls in value because of the high volatility of the trading. They're buying something, they're getting rid of it. They're not really holding it. You know, whereas an investor, I want to hold on to it and I wanted the worth to just go up, 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 and I want everybody to be desiring to buy it. I don't want people selling my stock because that's telling me that it's worthless. So that's how the two are kind of correlated. The traders on a daily basis affect the long-term investors. However, when you're a long-term investor, you don't look at the daily activity of a trader. You basically have an outlook of years down the road of this is the type of return I want to see. An investor is, let's use you as an entrepreneur. The investor is, I've given you $10,000 for your company. I don't need the money right now, but in 5 years, I want that 10 to be 20. I want that 10 to be 15. I want that 10 to even be 12. I want it to be more than what I put in, substantially more than what I put in, so it made sense for me to invest. You know, so whether or not somebody moves a share or not, or does something during the day, whether or not your equipment breaks or your lights get turned off, or your job or your business is not going how you envisioned it in a week, you had a bad week. As an investor, I'm not really concerned with you having a bad week. I am concerned with you having a bad year, or a bad 2 years, or a bad 5-year stretch, because there's a chance that I'm losing my investment. So those are the distinct differences between investing and trading. Investing is more of a stable practice, it's more of a long-term activity, and trading, it's more day-to-day, week-to-week. It's a temporary, volatile situation. Everything's moving, everything's going. Me personally, I am an investor. I'm not a trader. I don't sit there and, I don't watch the tickers all day and watch the market, watch prices. Not saying that anything's wrong with that. If I know traders actually, and they make pretty good money, daily. But in my preference, I prefer to be an investor. I prefer to long-term invest in companies and build sustainable businesses through them and be a part of those businesses and a part of change. As a trader, this is where people label stock market investing as gambling. This is where they give them that stigmatism, because it's close to that. It's the closely related term. However, trading would still probably be more probable to profit than going and putting your money on the roulette table. Anyway, I hope you've enjoyed this video. Once again, this is the difference between investing and trading. If you enjoyed it, please share a comment, hit the like button. I would really appreciate it. And also, if you want to see more content like this and a variety of different things that we talk about here at the Idea Factory, subscribe to Idea Factory 251. Till next time, peace.
I'm fully automatic, you ain't even in my caliber. I'm a man of principles, don't make me have to paddle ya. No Herm Thomas, to be honest, homage needs to be paid. I can see the future, you about to witness history made. History made. History made. I can see the future, you about to witness history made.